Hi, everyone. Thank you very much for joining us today. For those of you who are new to the Auckland Property Investors Association webinar platform, hello, my name is Sarina Gibbon. I run the Auckland Property Investors Association as its general manager, and from time to time, I moonlight as the webinar session host. With me today is the lovely, the wonderful, the one and only Mark Honeybone of Harcourts Property Ventures. Very active in the sort of central Auckland, Alexander Park area. Harcourts Property Ventures is one of our major sponsors. Mark and I had we've known each other for, oh my God, exposing our vintage here.
Long time.
Very long time. And he's always, just by way of context, Mark's always been an incredibly trusted voice in the industry, that seasoned investor who's been hanging around the circle long enough know to turn to him for impartial advice. Yes, he is a real estate agent, but I think I have a sneaky suspicion that his passion is in property investing and helping other investors out. So it was really, really wonderful that after, I think, an acquaintanceship and friendship of over 15 years, that late last year we were able to secure Mark and his team as one of our major sponsors. And going forward, we will be able to enjoy a lot more investment and real estate buying and selling content to help you in the next phase of the market make some really fantastic decisions. So, hey, Robert, just looking at the chat box. Okay, so before I hand the microphone over to Mark, who's prepared a lovely presentation for us today to really hone in on how do you not just buy well in this buyer's market, because it is still very much a buyer's market in many spots around the country, but you kind of want to be a bit more smart about it. Like, you don't want the sort of future gain to just be driven by market forces. You kind of want to up the ante a bit at this moment that's already advantageous for you, but you want to add to that as well. And that was very much the intention behind today's webinar idea. So I was really, really pleased to see so many of you guys signing on to come along, because I think it's definitely something that's super relevant and of interest to investors. So before I hand the mic over to Mark, who's going to take you through the content, I just want to remind you all that everything that is going to be covered in today's webinar is intended to be general information only and not legal, tax, or financial advice. I will jump back in after the main part of the presentation to sort of do a sweep up of the Q&As. But in the meantime, Mark is also happy for you guys to pop in some questions throughout his presentation, just so you're not disrupting his cadence as well. If you do decide to submit a question throughout the in the middle of Mark's presentation, come on, don't write a thesis, okay? Make it snappy and short so the guy can talk, read your question, answer it, get back to talking. Very good. Enjoy the presentation. I'll see you all very soon.
And just Sarina, if we go, my next button, will that appear when you go, will it? Am I going forward and back? Oh, there it is. There it is. Well done. Thank you. Yes, thanks, Sarina. Thanks for having me on. And yes, I almost forgot to say, yes, all these my opinions are only my opinion. They're not of Harcourts or my office or anyone else. So there you go. There's my disclaimer. I can get on and talk about what I like to talk about now. And yes, I am a real estate agent, which will turn some off immediately. Have been involved in property investor associations around the country for the best part of 20 years, and I sort of live and breathe and a property and love it. So there you go. So yes, we're talking tonight about strategies and what have you, and the today market, which we'll talk about in a minute. But a lot of you will know me. Those who don't, my one claim to fame is I was the first property podcaster in New Zealand. One of the first time I've ever been first. The way I look at it, you don't have to be the best all the time, but you can't take away me being the first. So that's my claim to fame. Started the second buyer's agency service, which sort of lends the fact that I do are and always have been into the property investing side of the property market since I've been involved with property the last 19, 20 years. What I mainly did was I worked for property investors, so like most of you online, renovators, and also in later years developers find them properties that they could do to carry on their portfolio or do a renovation or what have you. Did a lot of renovations myself at one stage. So those renovators out there, I know what it's like. I did 30 in 2 years, and it's fun, but it's not necessarily easy, and there are certainly a lot of risks with it. I've done a lot of other things too, but just in the last 3 years, I never thought of being mainstream real estate, but I now own the Harcourts Property Ventures at Alexandra Park, and I had that all to myself, but just of late, Fiona Lee, who's a bit of the queen of West Auckland real estate, she's joined me here in her team, and she's now also half owner with me. So tonight, what we want you to achieve, nothing about me, is just gain some strategies and ideas on how to cope. And it's all about building your portfolio, and it's got in a slow market. A lot of the strategies are really just basic strategies that you all need, and those who've been around for a while. I probably want to inspire you too much, but hopefully for any younger ones on there, I'll certainly be giving you some tools that you just need to do to move forward. And it's not a short game, this real estate gig. This property investment gig, it's about the long term, and I wish I did things a little bit different when I started, to be fair. And if I did, I'd be in sort of better situation again. So all good. So let's get into it. I'm happy if you just drop a short, sharp questions in the chat box as we go through. Otherwise, I'll get bored of my own voice and fall asleep. Right. So what are we going to cover today? We're just going to talk about the real growth in a slow market. What it really is, it's basic property investing 101 in a way. So we will just discuss that. Smart buying for long-term gain. I've already mentioned that once, and it won't be the last time. So it's buying well. You've got to buy well. You get one chance when you buy it. It's when investment property, and it's when you buy the property. Once you've brought it, you've brought it. And good deals versus great ones, and that's obviously very important. And there is a bit of, if you buy a good deal and you do hold it for 20, 30 years, time does make it good, but not all deals are equal. So a couple of real life case studies and habits of successful investors, and that's a nice wrap up at the end. I think of any investment, have a reminder of how that works. So oops, push the button. So before we start, I'll spend a bit of time on this slide because a lot of you are probably going, "Oh, Mark, what's happening at the market right now?" I do feel as a real estate agent, when you are really actively involved, like I immerse myself in it, and you see the market before others see it. And I've through my podcasts in recent years, 5 years ago and 6 years ago, we have picked things before, I guess, it come out in the newspaper and the stats in 1 month or 2 months or 3 months later. So I have got my own opinions on the market at the moment. Before I do that, it's a really good story to explain. And for those who haven't sort of heard this, I was in a presentation last year with the head of Harcourts, and he said, in the last December 21, a lot of you will remember about the triple CFA rules come in, and that killed the market. In fact, killed my old business pretty well as well. And what that did, it was people couldn't get lending, and that was a massive effect. And then after that, the interest rates went up. So it was a terrible market for a few years, and a lot of bad things happened with property and hurt a lot of people. If you go through those few years, New Zealand normally has about 80 to 100, over 100,000 properties a year, every year that sells. And this is just to keep on what New Zealand has to have to make it go round. Things like, the divorces and births and job changes and kids leaving home and all those wonderful things that we just do every day of the week that happens. That's what we need. So that happened 80 to 100,000. When twice in the last 4 years we've only had about 50,000 sales happen, it affects the market, and it means obviously where people have either been holding off selling because they still need to sell, they've still lost their job or got a new job or had a child, or the wives have dumped their husband or whatever it might be. to move on. So those things still happen, but the property hasn't gone. It's a bit like if you go back to the COVID, and I'm not suggesting this at all, but for COVID, you remember there was no one moved in a house for 4 or 5 months, and then we all got worried about what was going to happen, and we all know what happened when it came back. The market went crazy, too crazy, and for too long. I'm not suggesting that's happened, but it just shows an example of recent years where it's already happened once, where nothing happened, and it just had to catch up. There were a lot of people wanted to move, and they had to move, and at some stage they did. Now, what's happened in the last couple of years with the interest rates so low, so high, and those triple CFA rules coming up, and people couldn't get lending. The market has been bad. It dropped. You've got that figure down the bottom of the screen, 19.2% in Auckland over a 2-year period. People have held off selling their homes, and some people are still hanging off selling their homes until they need to, and because they want the market to get better before they sell. Well, over 2 years, some people can't wait, and some people have just had to sell, and we've seen in the last 6 months or year massive amounts of people coming on the market now. In February and March, Trade Me had the most properties ever on Trade Me property in February they've ever had, and in March it was higher again. So that's happening, and what I see happening, I still see there's still a lot of people holding off, and in the next 2 years there's still going to be an abundance of properties come on the market, and these are the ones already backed up from the 30-odd thousand or 40,000 that didn't sell for 2 years in the last 4 years. And I see that carrying on. So even though I'm going to tell you some good news about the market, people buying at the moment, I still see a lot of properties come on the market over the next year or 2 years. The other side of it, obviously, now is the as I was saying, the buyers in the market right now. They're since late last year, since they talked about OCR drops in December and November, there have been buyers come back into the market, and I've just seen every month there's a new little select few. The percentage goes up of people back in the market, and there are a lot of people coming back in the market every month, and these are people missing out on properties because there are people coming back in the market. Now, is it going hot? Is it going to be like 4 years ago? I doubt it very much. But the market is going well. There's a lot of transactions happening right now. We're seeing things we haven't seen for the last 4 years, like multi-offers and options brought forward, and all those horrible words as a property investor, but they are happening. So it comes back to the investor. If I was sitting with you now, I'd be saying, ask any investor, when's the best time to buy? And someone will get up and put their hands up, and they'll say at the low point of the market. And of course, when is the low point of the market? It's the big question everyone wants to know. And that sort of it comes down to that. It's really muddly at the moment. As I said, we've got to have some open homes. No one will turn up, and then we'll have we've had some outstanding results in our office in the last 3 weeks. We had one investment property. It was three flats in average condition, but good cash flow. And we had the reserve. I think it was in Otahu. The reserve was 1 million, and it sold for 1.3 million. So the lady owner in the back office was extremely happy, we'll say, when she got $300,000 more than she was willing to sell it for. And there were five property investors bidding on that property. So that's happening right now. Just a week, the next week after that, in our office, we had another auction. It was another place in Otahu, one house split into 3 flats, and that one had it was basically a wreck. It needed redoing again. It didn't have bathrooms, didn't have kitchens, so someone had to go in there and redo it. And the reserve was 900, which we thought was probably quite high. It sold for 900, and it was $63,000 or $53,000. So another 50 plus thousand above the reserve. Remembering it probably cost $200,000 to do up those 3 places, and one sold a few days earlier for 1.3. But probably still a good buy, because if you got it for and renovated for 1.2 mil, the other one sold for 1.3, and that was pretty tired. Maybe that that 950, 60,000 was actually a good buy after all. So that's happening. I remember December. It was a indication for me. A lot of my traders and renovators, they started ringing me up back in December, and they go, Mark, ready to get back in the market, sort of thing. And even one of them then said that they're looking at a property. And I said, I'll be patient for a few weeks. And I said, well, just wait. I said, don't wait too long, because there are people back there now. And he come back a week later and it had sold. So some places are definitely selling. Some property investors are certainly back in the market right now. But there's still a whole lot of property out there, and there's still a whole lot of property going to come back on the market in the next wee while. It's just common stuff at the moment. At the moment, even today's a classic example. I've had one that's actually got unconditional, got delayed till tomorrow. I've had 2 go into contract last week. 2 have got unconditional, and today I got 2 calls of people that want to list with me now. So the listings every day, listings are coming on board. So that's the good news if you are still buying. So I'm pretty upbeat at the moment about the market. I like transactions, and there's transactions happening. But if you really want a property, you might have to get in quick and buy it. But if you're patient, there probably will be something else come similar, unless it's a really different property. So that's sort of a bit about where I see some event of sentiment versus reality. I guess the sentiment now is it's a buyer's market, as Sarina said at the start, and it is still, I guess, a buyer's market, but a lot of buyers are missing out right as we speak. So just watch the space, but I can see this carrying on, and I hope it does for the next year or 2 years. It just appears that it probably will. I don't know how far you can predict these days. Here's some brave economists saying it's going to be fact for 5 years. I don't know how anyone can predict that far out. We'll see what the ASB economist says tomorrow night at the APIA event. I'll be there. So why soft marks often reward the bold? It comes back to the people who brought in the last 2 years have brought very, very well. As if someone's buying now by themselves without any opposition, they'll probably buy well. So when it has soft markets, often reward the bold. Not many investors have been out there 2 years ago, 1 year ago, and there were outstanding buys. There was no opposition in the last 2 years, so it would have been, or has been a great time to buy. Now people are coming back because they're having a bit more confidence, and we'll go there. There's a question I see about retirement villages. I'll maybe talk about that later on at the end if you bring that back up, Wendy. Excuse me. So I'll move forward. So that we haven't even started the presentation yet, but I think that's really important to get a grasp of where I see things, every day. So there's a lot of action happening at the moment. That is for sure. Right. So of course you go down to the first point I got told to talk about, identifying areas that will grow in value, and it is really just basic property investing 101. So for the new investors, I guess you can listen in. Others might want to go and grab a cup of tea, but that's just choosing the good solid locations, and that's whether I'm not saying that that's a big city that you might want to buy cash flow in Invercargill or anywhere else. It's just within wherever that town, wherever that suburb is. You just need some good building blocks, and by that you need locations that are doing well. What I mean doing well, they're doing well because of industry, because of infrastructure, and of course your zoning changes is obviously a very big thing. We've seen that a lot in Auckland the last 20 years. So they're just the basic, the basic things. I remember Kawerau several 15 sort of years ago, and it was a bit of a boom down there for a while, and then their major job people that gave people jobs sort of fell through, and it went up and down sort of thing. And I actually don't know anything about Kawerau right now, so I probably shouldn't have brought that one up. But that's an example of what it is. So do your research. Don't just say, hey, I hear Invercargill was a great place to buy. Let's go down there. Or I hear Hokitika is good. It's the West Coast. It's really cheap. It doesn't necessarily mean it's going to be a great place to buy. Do your research for what's down there. You need 2 things, right? Well, you need a tenant, number one. In some of those places you might struggle, or some other areas of New Zealand. And of course, at some stage, hopefully you'll get some capital gains. we'll talk more about that shortly. So just do the basics. That's the basics of investment, is just seeing, what's there, what schools are there. We're at Alexandra Park, our office, and we're doing a new big new apartments about to be built. It's going to launch in a couple of weeks. And of course, the great thing about where we are, we're in double grammar zone in Auckland. Any Aucklanders know that's a great selling point, and it holds the prices of property up. And the prices should never drop too far because of that. So they're the sort of things I'm thinking about. Demographics of school, the age of people. Is it a young town that's starting to go up, or is it an old town starting to go down with no industry? And there's a few of them around the country as well. And the economy obviously is pretty important. Right, we'll move on from that one. So buying smart equals future profit. Yeah, it does. And I think buying, holding on for a long time is a big thing about future profit also. So sort of just work through this. I've had sort of probably more setbacks than most with property. It's probably because I didn't do some of the basics that I'm talking about now, well, and it is, it's all about not rushing out, doing like the last slide said, do your research. Don't only trade for the rest of your life, because you're never going to get your capital growth from holding on to property. One of the tips I'd like to say, and what I've learned when I first started with property investing, and I apologise to some of you, because some of you will still agree with this, never pay debt down, have as much debt as you can, leverage off it all. I've changed my mind in the last few years, I guess, last 10 years, where I say now pay debt off as quick as you can, within reason, or maybe not as quick as you can, and get some advice from a very good accountant. Accountant has to be your friend, whatever you're doing. If you're trading, whether you're buying, holding, you need to have to get the best tax advice from you. You must have a good accountant who knows you and wants you to achieve and trying to get you to achieve. So that's really important. But for me, if you pay the debt off, as when I say as much as you can, keep paying debt off. For me, it's a win-win-win situation. It's a win because you get better cash flow. Obviously, lower the debt, the more cash flow you get. That might not be that important to you. Less risk if the market turns. If you were 100% leveraged or 90% leverage back in December 21, you had a pretty nasty time in the next 3.5 years until just recently. If you had paid a lot of debt off, you can get through those times. So that's something that I've learned through the hard times in the last sort of 20 years. And of course, the better equity, the more you pay off a property, the better position you're in when that property of the decade comes along and you can't afford it. Well, you might be able to afford it because you've got some equity in your house or your block of flats or whatever it is that you're holding on to. So for me, that's sort of a part of the story of just my personal learnings in the last 20 years of that I would do a little bit different. And it's only if you can. Not everyone is a fortunate position they can pay a lot of debt off. So if you need to get in with 100% lending, interest only where you can, there's nothing wrong with that at all. But as a long-term 20-year strategy, it's a bit more risk, I guess, if that's what happens. Back to timing as part of the story. I said if you've bought in the last 2 years, you'll be doing very well. Now there's some really good buys out there still, but you're going to miss out on quite a few of them, and you need to get in quick or be patient and wait till another one comes up. And I'll talk about patience a bit soon also. You've got more power to negotiate in a slower market. Definitely. In the last 2 years, the only people seem to be buying properties we had were renovators, and that was it. So some renovators out there brought some outrageously good buys in the last 2 years. That's great when there's no opposition. It's great buying when there's no opposition. When I did 30 properties in 2 years, about whenever it was 10 years or so ago, probably a bit longer than that now, there was hardly any opposition. So I was always, it was me versus the agent, or me versus the owner, or me versus the bank, one of those three things. So you certainly have more power. you can practice all your negotiation skills you learn and put in the practice and experiment and have a good time with it. And of course, if you can, you aim for both cash flow and capital gains. In the long term, you need both, and but don't necessarily expect to get both in the same deal. I remember a few years ago there was quite a few educational groups out there, and they'd come to me and they go, Mark, I want a 8% yield and I want a 20% undervalue, all in the same deal. And you'll be laughing right now, and pretty well had to stop myself from doing the same. And I guess 15 years ago when I started trading myself, and I met quite a few of you who probably online, yes, I could get 8% yields and 10%. That's how I traded. That's how I started being a buyer's agency. I'd have 8% yields, I'd leave 10% equity in for the next buyer, and I'd take the balance, whatever that was, if there was any. But you can't really get them on the same deal every day of the week. So if you have the cash flow deal and then you're getting a great equity deal, that's what you do. And I'll give you a couple examples of them, a couple coming up shortly. Right. Excuse me. So what makes a great deal? And it doesn't have to be all about price. Yes, price certainly makes a good deal, and we love having get the price, but it's all about the conditions that suit. Long settlement is obviously one that works. It doesn't always work. If you brought a property in December 21 with a long settlement of a year's time, and a lot of people did because they were buying off the plans at that time, and a lot of people got hurt for it. So you do have to be careful. In a market like now, you're pretty safe having a long settlement, and that does work for a lot of reasons. So that's just one reason why you might want to do. But you have to have the numbers. They have to work now and tomorrow. And again, tomorrow is important, because if you again brought back in late 21, early 22, what if? You always have to think, what if? Even now, if you get interest rates at 5%, what if it's at 7% in 5 years' time? Will you have enough debt paid off to cope for that 7%? Can you deal in that situation if it was 7% tomorrow? And they're the things you have to do with property. You always have to have a bailout situation. And when I used to trade properties, as I said, a lot. I remember 6-7 years ago, there were some traders that were new, and I just kept saying to them, what's your bailout situation if the market dropped tomorrow and you had 3 or 4 properties? Can you cope with that? And so the numbers have to work for today and tomorrow. Room for improvement or expansion, that's sort of, I guess, property 101 again. That's how do you make money? How do you one of the ways you make money in a property is a whole lot, but one of them is by improving the property, renovating it, or expanding it, make it a 2-bedroom to a 3-bedroom or 4-bedroom by putting a wall in, or maybe building on extra. The one that brought the block of 3 flats with nothing in it a couple of weeks ago, they're going to spend a couple $100,000. They'll probably put another couple $100,000, who knows, maybe more on that property by making improvements. But right now, what most of you people will be after will be that, I guess, that motivated vendor. One thing we teach, in fact, we had a weekly meeting today. Every Monday morning we have a weekly meeting, and we go around our new listings. And if someone in our group puts a listing heading of beautiful 3-bedroom home with a nice swimming pool or something like that, they get crucified in our meetings, because we have to tell buyers why the vendor's selling, and that's what we try to do. And because as you as a buyer, you can see that it's in Glenfield, you can see that it's a beautiful home, or it's next to the school, or whatever. Those things are pretty obvious. So you have to do your research if it's not in the heading and find those motivated vendors. That's what I did those years ago when I bought 30 in 2 years. Was we concentrated on motivated vendors, because especially in this market now, like it was back then, it's now's the time you have very motivated vendors. Some have got very high interest rates. it's quite a sad story at the moment. We're probably selling 1 in 4 or 1 in 5 properties at the moment where the vendors are actually losing money because they bought between 2 and 4 years ago. And I hate that, but it's the way it is, and we tell the truth and to them, and you just have to. And it's a sad state of affairs. I've got my property I've lost money on myself in the 4 years. I didn't buy it, but I've had it, and it's because of situations. It's just life. It's what's happened. So good things happen to good people, and that's all it is. But as a buyer, there are some extremely motivated vendors out there at the moment, and clearly I'm talking today with my property investment hat on, not my real estate hat. So that's all good. One of the things I said before was about patience. Is, as I said, if you have quite a hot property you want now, you may miss out on it because there's a lot of other people and investors coming back. And probably testament of that is this actually webinar we're doing right now. About 2 or 3 years ago, I was doing lunchtime sessions on webinars for APIA, and we're getting like 10 or 15 people. And I know well over 120 or 30 have registered tonight. And that just is a sign of the times. Investors are back in the market, which is great. They are. But yes, you have a bit more competition. But as I predict, there will be a lot more properties come on. So yeah, I'll tell you a real life situation just lately. It's a really sad situation for the vendors. They brought in Glenfield about 10 years ago. They're not from New Zealand. They come in. The agent didn't tell them, whether they knew, I don't know. But they bought a property that didn't have a 3-bedroom home, didn't have code of compliance. The bank somehow gave them money, and they got a mortgage without a code of compliance home. Move forward 10 years, they go to sell. They find out it hasn't got code of compliance, and all of a sudden it's worth, not what it, or about maybe on a good day what it was when they bought 10 years ago. Very distraught. And of course, people don't like losing money, and it's a terrible thing when you find out that you aren't going to get as much as you paid for your property. And a nice 3-bedroom home in Glenfield, you expect to get $1 million or close to it, sort of thing. Anyway, and all of a sudden, people say you're not going to get that. It's hard, and so they went through into last year and wanting 900, and I come on after the first agent last year, and they wanted about 900. Of course, people weren't going to pay for that, so they rang me up, about a month or so ago, and said, Mark, we'll accept a major discount from 900, we'll say. And one of the buyers who was there previously was very patient, and rang him up, and he got the nice call from me, I guess, and like all my ones that had previously looked at it did, and he took action immediately, got under contract, and in fact just went unconditional a few days ago on it. So that's a story about patience, I guess, as an investor. He does code of compliance homes, so it suits him. There's quite a few people around Auckland that do that. So patience is a very, very important part of getting a great deal in this market. You can't in a hot market, but in this market, you still can. Excuse me. Right, just go through and these. Sorry, I've got 2 examples. They aren't spectacular examples. They're just things I thought of today. I thought I'd better get these slides up, and just of what I've seen in the last 12 months when it has been a buyer's market. This one on the left, they come to me in Sunnynook. It looks quite nice on the left. The photo on the left there, it wasn't. The family's had it for 50 years. They haven't touched it. They did the lawns and wiped all the cobwebs away from the front. Really terrific family, 9 siblings, and it was a mess of a property pretty well. I actually did talk with the vendor because they didn't want to advertise it properly. It went in multi-offer with 3 people from 920 to 984 and a half, and they accepted the top bid there. At 984 500, they went in there. I would say they spent 100 to 120 to 50k. They changed downstairs, so it's now a 5-bedroom. They didn't make it a legal home and income down the bottom, but they could have easily done that, and there's still something for the next buyer there. But there's something, if someone did that and then held on to the property, they didn't. They sold it for 1.315 mil. But if they kept it, that's a good equity gain of a couple $100,000 without the market moving. So when the market does move a little bit, that should go up again. So that's now a five bedroom, couple bathroom home with some nice views out the other side. So that's an equity deal you could have. And of course, if you even kept that, it's a 5 bedroom home, you're going to get some good rent from that. Not a the top of the line cash flow deal, but it will still be okay, maybe in your portfolio, depending what you want from your portfolio. And the next one is just one I've just been doing in the last matter of weeks, sort of thing. And I thought, that's quite a good one too. The current vendors of that property. It's a very unusual property, and I won't go into it too much. But if you see my cursor, there's on the left side here, there's 4 houses. It's actually a strata and a freehold house, about an 80-year-old, 90-year-old house sitting there. It's been broken into 4 flats. And the right side of the rectangle down there, this bit here, is the flat of 1D Calgary Street. That's rented out as a 1 bedroom. And this thing here looks like a garage. There's no car parking. You walk down the side there from the main road. And this here looks like an old garage. Has been renovated. So the vendors come in. It used to be a room. They renovated it into a 1 bedroom place. They turned into an Airbnb. They got safe and sanitary last year. And now this is now an official legal home and income place that you can rent out as 2 separate places. So they brought it for a good price. Was rented for $28,600. That's $550 a week, I think it is. And now, if it goes back to a normal rental in the back instead of the Airbnb, it's now $60,000. So for a very, a relatively small outlay, they've gone in there and they've over doubled the cash flow. The fact that the current vendors have turned that and the left part into an Airbnb, getting just over $100 a night at 86% occupancy, which is massive. I still personally, for me, think it would be better as a normal rental. Depending on the situation, you might want family to come in and rent it out and all those good things. But just a couple of examples of what you can do. And if you brought probably that example 2 and example 1 in your same portfolio and kept it, that's probably not a bad portfolio. And just we sideline to this one here, what's coming up this week, the new CVs are apparently all going to come out for Auckland. I imagine the CV in this one will be substantially higher. Now it's 2 legal incomes, where currently it's 1 legal income. So just look that little bit further into the property. Look at the headlines of properties. If the headlines are from an average agent and it doesn't tell you about the property or the vendor, ring up and find out about the property, and that'll certainly help you. So hopefully those 2 are okay. So you can get properties from standard real estate agents, eh? Right. The last real main slide here, I guess, is habits again, sort of investor 101 stuff, but habits of successful investors, patience. So I just gave you a classic example of patience with the guy in the Glenfield property. It's nice just to talk about, properties that have just happened, because stuff is happening in the market right now. There are real opportunities out there at the moment. So you just got to get out there, get your finance ready, and get out there and get going. The timing is obviously very good. Don't think if you see a house that will be there next week, if you're really interested in it. I mean, really interested in it, it probably won't be, but there might be something else come up. So patience and timing is really important. Learning and networking. You're on this call tonight because you want to learn something, or like me, I do these things to remind me of things. When I go and listen, like tomorrow night, I'll hope you remind me some stuff. Listen to podcasts, listen to ebooks. I listen to an ebook most mornings when I go for a walk. It's like reading a whole book on Headway for me. I use, and it's terrific. So just different ways you can learn different things. Have what good investors do. They have their due diligence systems really, really well set. And I don't necessarily mean go and put a due diligence clause on your sale and purchase contract when you're buying. Obviously, some agents don't really like it. Most people don't like it from the sales side of things. But it doesn't matter what you have, but have the systems in place. So as soon as you go under contract, you get people around there as soon as you can to do whatever it is you want them to look at. And whether it's checking something so asbestos or not, what a builder's report, whatever that might be, get in there as soon as you can. But what some people do, they muck around too long, and they lose momentum, and someone else has come in behind, and they haven't done all their work, and they lose what might have been a really good property. So that's really important. Yes, it goes on next one. Having your team is so important, and for me, accountants and lawyers are incredibly important. They're so obvious, but they are really important. The more I've got into property and business, the accountants become more important. Solicitors has been my pet hate. Those who've listened to me over the years, I have a real. Sorry, any solicitors out there listening. I've got a bit of I'll give them a bad rap often, but it's not always their fault. It's quite often our fault as the investor. Your solicitor has to know what you're trying to achieve, and go and take your solicitor out for lunch. Talk to them what you're doing, because solicitors are risk-averse people, and we pay them to find things wrong with a contract, a house. That's why we pay them. So over the years, when I've seen some people, some first-home buyers, some new investors have the most amazing opportunities, and their solicitors told them about the faults and they haven't brought it. And in some cases, I know one particular one that sticks in my mind from about 8 or 9 years ago, and they were buying themselves $200,000 or $300,000 equity, and because they didn't really know what they were getting, they believed the solicitors. The solicitors didn't really know what they wanted, and most of them pulled out. In one of those cases, I went and brought one purely because I got annoyed with the other ones, not that were pulling out. But it's really important to have that team. But solicitors, if you're in this game for a seriously long time, you want to buy some property, get your solicitor on the side, let them know what you want. So when they say, hey, there's something wrong with this property, and you go, yes, but I want to buy it because of X, Y, Z, they might still say, hey, great idea. That's good. At least you know the risks of what it is. It might be a title that hasn't got something's not on the title, but it's still a fantastic property to buy, and it's worthwhile doing. So anyway, enough on that. So powers with the buyer, as I said, now, not always, not at the moment when we have an auction with lots of bidders, but generally if you're in early, you're patient, there's a lot more property coming on, the power is with you. So know what's a good deal. It doesn't mean you have to buy well all the time, but you only ever get one chance to buy. So if you buy a property and next day you think, oh, I could have got it for 20,000 less, well, it's too late. So as an investor with my investor hat on, buy well. If there's you're competing against 2 or 3 people, or if you get an honest agent out there, and I'll tell someone last week that I said I sound like an agent because there's another buyer who's going to come in tomorrow with an offer, and they did come in with the offer, but lucky they believed me and they went in there and they competed. But if there is other buyers out there at the moment, so that's just keep that in mind. But if you can negotiate well, you only get one chance, so buy well. Again, the strategy is obviously hugely important. You must know why you're buying a property. You shouldn't necessarily, like I did a lot in the past, just buy it because it's cheap. It should be a strategy when you're building your portfolio. Do you need cash flow, or do you need equity in your portfolio? Do you need to buy it to make it a 3 or 4 bedroom home? Do you need it to make a second dwelling? Have your strategy before you buy, because if you don't know where you're going, you'll get there pretty easy. And if you do know where you're going, it might be harder to get there, but the rewards will be huge when you do get there. And just stay elevated, stay confident. You do that by just reading, going to seminars, meeting people, like-minded people is so important. And I've done a big part of my last 20 years of my life by being with like-minded people, and it keeps you confident, keeps you going, and you get better at what you do. So growth, yes, is there if you know where to look. I think we sort of spoke about that. At the moment, I guess there's growth everywhere. If you can buy well, we are, in my opinion, at the bottom of the market. We have been for 2 years, but it's changing now with the amount of buyers back in the market. I see now as a changing time. I still think there's a lot of properties coming on the market in the next next year or two, as I spoke about. So there is a bit of time, but yeah, now is a great time to buy. Obviously, now is perfect. Already just said that, and a great deal is the numbers, the vision, of timing. As I said, the vision, the reason why you're buying, the numbers have to stack up, and you don't get much of better timing than you do right now. Think long term. As I said right at the start, it's a long term game. So that's what we're trying to achieve when you're buying for a long term property investment portfolio. And those younger people out there, good on you for getting there. Get started and go and live in a home, and or buy a place and renovate it, live in it yourself, and get some equity, and then hopefully you can move on to a second or third, and then you can start keeping property, or you might want to keep that first one and then buy a second one, an ideal scenario. So that's sort of I hope Sarina's coming back soon, if she's not already there. But that's sort of the questions. Let's have a bit of question and answer time, eh?
So good. Is my audio coming through?
What's that, sorry?
Can you hear me? Can everyone hear me? I just want to double check. Yeah?
Yep.
I'm assuming everyone can hear me. Hey, Mark, that was wonderful. Definitely to your usual high caliber, if not better. So thank you so much for sharing some inside tips as an agent and a property investor to help the community buy well and buy smartly. Now, before we jump on to the questions, there are a few things I want to talk about here. So I know that there are quite a few non-members of the Auckland Property Investors Association on this stream, and I just want to take a moment to introduce ourselves. So we're the largest not-for-profit property investor group in the country. We're part of the New Zealand Property Investors Federation Network. We are an independent organization, and the independence just means that we have a lot of autonomy in terms of our activities, our objectives, and our purposes. I probably said that back to forth. But anyway, if you enjoyed Mark's presentation, I'm really pleased to let you know that we do a bunch of these presentations throughout the year for our members. Most of them are members only. Every now and then we throw open the doors and invite non-members on board so that you can get a glimpse of what we have got up our sleeves and what our network looks like, because I think we have a lot to offer for property investors in terms of curating some really solid independent content to help advance your investment career. If you want a more sort of complete understanding of where the market is at, I do invite you to come along to tomorrow's keynote meeting and in panel. We will have the chief economist from ASB, Nick Tuffley, talking about what exactly is happening with our economic recovery and the housing market, where it's heading towards from his point of view. And he's obviously speaking from some incredible data he has available through the ASB Bank network. The next thing I want to let you know is if you feel tickled by this presentation, you want a bit more and you want to plug into your local Property Investors Association that is about celebrating property investments, doing it ethically, doing good in the community, doing good by you and your family, I invite you to become a member of our association. I'm going to pop the joining link on the chat box over here. And if you use the discount code, thanks Mark, all one word, all cap, you'll get a bonus 3 months on your first year membership with us. So the discount code once again is thanks Mark, and you'll get bonus 3 months for your first year of membership with us. Instead of 12 months, you'll get 15 months of membership. I'm going to time out that offer on the 20th of June 25. So I hope to see lots of you coming on board and just join our community. Now, Mark, I did sneak out while you were speaking for a bit. I just want to double check. Have you talked about your fantastic offer?
No, not at all.
Do you want to talk about it, or do you want me to talk about it?
You talk about it. Before you talk about that, just to talk about the APIA thing again. As they're all around the country, as you sort of said. I first got involved in the Marlborough Property Ventures Association down in Blenheim there, and then moved to Auckland when I moved to Auckland. And if you're listening there and you're not a part of it and you're interested in property investing, it's fantastic. What I love about good people in property, they share these stories and their successes. And I remember going along to my first meeting, going, "Who are all these old buggers in this room?" And I soon got to learn that some of the wealthiest people around and the most helpful people that want to help you do well. So if you do and join, come along to the meetings like tomorrow night, and you'll meet some terrific people. Don't just sit at home and watch it. If that's all you can do to watch it, do that. But come on along to watch them. So I've invested money into it this year to be a sponsor, and we love coming along to it. So sorry, carry on.
So good. Thank you so much. And to give you a working example, Mark's in the middle of helping me buy a property. He's not even selling it. And I think it was, quite late last night. I rang you and I was like, effing this, effing that. This agent's really annoying me. What should I do? Because I'm a buyer and I feel completely disempowered in the process, even though it's a buyer's market. It was bonkers. And just even having access, to be honest with you guys, I rang 3 people in the APIA network yesterday, and it was like part strategy consult, part counseling. And it was just really good to have a community of people who's like got your back. So if you've not already plugged in, highly encourage you consider doing that. And now Mark's fantastic offer. So for those of you who have sold properties in the past, you will know how expensive it is to sell a property. And didn't really have to strong arm Mark to do this, but it was really fantastic when he came on board to make a generous offer to APIA members. If you do want to sell your properties and you list it with Mark's company, Harcourts Property Ventures, and I've left his contact details in the chat box, so refer to the right-hand side of your screen. And if the commission is over $20,000, upon selling, you will get your marketing spend refunded back to you. If the commission works out to be less than 20K, then you will get $1,000 refund, or you can direct that $1,000 to a charity of your choice. So it's just a little bit of something back to you and a bit of incentive to sort of, for you to have a really good look at your books right now and find some low performers. And if it's a good time for you to just move them along. I think it's going to be, you're really going to enjoy working with Mark and his partner, Fiona. They run a fantastic team. My husband and I had made the commitment that if we ever sell, I mean, we're not big timers, we've got very small holdings, but if we ever sell, that's my spiel. And let's take some questions. So we do have a bit of time. Do pop your questions in the chat box. Mark, did you manage to do Paul's question about buying?
No, I haven't done Paul's or Wendy. So yeah. What's Paul's got there? What is it possible to buy cash flow positive from time of purchase at the moment? Experienced investors keep telling me no. It depends. I mean, this is the thing. Everyone's so different. What is cash flow? Positive property. And everyone has their own formula of how it works, and it depends on what you're buying. So I'm going to be really vague with this, but I guess my question is, yes, you can buy off the bat 5% yields now. There's still quite a lot of 5% gross yields. Whether that's cash flow positive, it's probably not quite, but it depends on what you mean. If you're putting 20% in, and is that cash flow positive? Yes, it probably is. But for me, about 5%. Gross yield is about where I see the market now as of. There's still quite a few of them, unless you're going in the small apartments in the centre of town that Rod and Zoran and Ed, who work with us, sell, where they're getting some 12% net yields, but they are quite different from what they're not buying any land and what have you. So apart from those ones where you can get 12% net yields, I say a 5% gross yield is about, maybe a 6 will be about the best you can buy off the bat. But unless you do something like we had the example before of the Calgary one, when you turn that into double the cash flow, all of a sudden that'll be a lot better than it's sort of about at least a 7.5%, maybe an 8% yield.
And just to share my experience as well, admittedly, I'm not currently looking in Auckland, so I'm looking somewhere else. And the house that I rang Mark about and got very angry over, I got angry at the agent, but the agent isn't Mark. The one of the attraction was the valuation said one price for the property, and the vendor was very, very motivated and did a huge price slash on the, eventually put a listing price on it, and it was for us, it was like, if we're successful buying it, we would make some instant equity right there, which I think was very attractive. Will be close to cash flow neutral. So I do think cash flow positive, I do believe they will be out there, but you've got to look hard.
Yeah, I was meaning purely in Auckland also before. So in different parts of New Zealand, there will be different ratios, and you probably still can get those sort of yields. Yeah.
Are there buyer's agents who can like specialize in helping investors look for cash flow positive properties? Because you used to be a buyer's agent, didn't you?
Yeah, and there's still the likes of I find property out there. Those guys are there. If you look for stuff in Auckland, we can still certainly help, and I like having my little selection of buyers lists, because I get one of my referral systems that I helped create about 10 years ago, which is still very, very good. People come along to me, I get introduced to them, and they're about to list their home or would like to not go to an agent, but they get introduced to me. And some of those people are very good people to buy from, because they talk about the motivation thing we spoke about before. Those people are motivated. So we do have, so it's not a buyer's agent as such, but good agents will have people work for them that work their buyers, and we'll find them something. And we're lucky we've got a few of them in our office now, so that's all good. Yeah. And
I think you bring up a really good point as well, is just the power of a decent network. I think traditionally, because property investors tend to work in silo, it is very easy to overlook the value of a decent network. And definitely it wasn't until I realized the power of my network that I was able to really amplify some of my efforts in the property space, simply by reaching out to people to say, help me. That's literally how I start my text messages with people, is help me. And everyone's just rallies around you. Is fantastic. Jonathan says, how would you approach a vendor who you are under contract with if a builder report has shown issues?
How do you approach a vendor? Okay. Well, again, you just be truthful. If it's something they weren't expecting, there's two sides of this, because if they weren't expecting, they might have to either fix it or not. But some people, and a lot of us investors, we're very guilty at this. We try it on a little bit, eh? So this place I talked about before, the one where they've doubled the cash flow, it's now a double in home and income. We have an 80-year-old property there, and there's also something wrong with the back. One thing wrong with the back place that's been disclosed. So you can't really go in later and say, "Oh, the builder found this out about the property, and we want to drop $20,000 off the price." Well, you already know about that, and that's why you've bought it for the price you have. Don't go in twice. So I don't have too much sympathy for that anymore. But if it's something new comes up, we tell them, and we'll see what happens. And most people try to do the right things. I mean, we've all got bad raps in real estate, investors and agents, and even the sellers are not doing the right thing. I see people doing the right thing all the time, and they'll come out, and sometimes it might be okay, we didn't really know about this. How about we go half each with it? Or there's a lot of ways to do it. If you both have a bit of a middle ground, it works a lot better. If it's a property you really want, and you find out there's something wrong with it, or it might be big, it might be small. If it's big and you want to move on, you move on. But go back and maybe do the old half thing. Say, hey, how about we drop half the quote? The quote's $10,000, and and we're doing $5,000. So we just had one classic example. Just one of the ones I spoke about tonight. We had a situation where I'll say it's Airbnb. It cost I think it was something like $3,000. I forget the exact number. We'll call it $4,000 to cancel the Airbnb, because they have to have 3 months notice. So the buyer said, how about it, we pay for half of that to cancel it so we can move in early? So, hey, is that a solution or what? made it much easier for the vendors. The vendors who are getting a wee bit anxious thought, hey, okay, that's pretty reasonable. So, let's make it work. So it's all a bit of give and take. What's really important is the big picture. And if you can have short, you don't have to win every battle. You don't have to win the little battles sometimes. Win the big battles. That's what you want to win.
I fully agree with that. I think it's about engaging in good faith, be prepared to solutionize, be prepared to work with the vendor or the buyer, whoever is on the other side, to find a solution, because everyone wants to see the deal across the line. Like I just reflecting on my recent experience with finding a property to purchase. Remember getting, what you said before about solicitors, without sort of saying this respectfully and fully acknowledging the nature of their work is to risk manage and be, and I understand a fatalistic view of the world being part of the job, but having to, jump on a call with our lawyer and just say, look, we want the conveyance, we want to take the deal across the line. We're not looking for ways to back out. We're not looking for a reason not to do the deal. We just want to get across the line. So I think it is always, there are different parties coming at the same issue with different interests and perspectives and motivations. And sometimes, as buyer, you want the deal. You just have to step up and kind of traffic cop your way through the whole thing.
Yeah. I have another question from Wendy. I actually haven't answered Wendy's one also at the top there. So she's saying, are you seeing many elderly people selling their family homes to move into retirement villages? I heard this was slow a few months ago. We have had a couple, but I won't say there's abundance of them. It's not the usual thing. We've still had more people leaving for Australia a year to 2 years ago. I'm saying that's dried up a little bit, Australia and other countries. But not a lot. But we have seen some elderly either moving out of town or downsizing, but not necessarily retirement villages.
Cool. I'm really happy with that. Did that go well for you, Mark?
Yep, all good.
Awesome. Hey guys, thank you so much for spending a bit of is it Monday today? Monday evening with us. I hope you learned a bunch from Mark and that going forward, you would feel more confident about being a buyer in this particular market. Do continue engaging with us because, property investing, things shift, market shifts, things, like Mark said, the CV is going to be published this week, God knows where that's going to move things and how will the market respond to that. So definitely, if you do choose not to plug into the APIA network, I don't know why, but do make sure that you are plugged into a legitimate network that will help you keep abreast of what is happening in the market, because so quickly the information you have right now in your head could very well be out of date. If you do want to join the Auckland Property Investors Association, we would love to have you. The joining link is in the chat box, and the thanks Mark discount code will give you a three bonus months on your first membership with us, and that offer expires 20th of June this year. Don't forget, if you do want to sell, highly recommend using the team at Harcourts Property Ventures, and make sure that Mark gets you that marketing budget refunded back to you. Because we don't want these agents who earn too much money, they earn enough. Anyway, thank you so much for your time tonight, Mark. Wonderful as always. Love you.
Pleasure. Thank you very much. Apologies about the very boring looking slides. I hope you got some more stuff out of it than that. All good.
Okay. Take care, everyone. Bye.